Okay, welcome to the Chapter 14, Section 3, Analyzing Cash and Receipt Transactions presentation lecture. As we move along through the content of Chapter 14 and we get to Section 3, now we are getting to different types of cash receipts transactions. If we break them down into two separate types of transactions, we have a cash receipt, which is a transaction in which money comes into the business, or we have cash sales. This is when business receives full payment of merchandise that was sold at the time of the sale. At the end of the day, if you think of any type of business, in which case a cash register is used. So for example, McDonald's or Quick Trip or something of that nature. Cash and register sales is going to be totaled and then also cleared and then recorded and accounted for in the journal. So let's take a look at these different cash receipts and how they're transacted. Let's first take a look at a receipt. A receipt, anytime you see receipt as a source document, immediately think cash received, which means cash in hand. So in this case, we are going to reference the Casey Klein transaction from previous sections. Casey Klein, we made a sale that we transacted in a previous section for $212. Now, it's come to the point where Casey has sent in payment for that sale. So now we have to record it. Also, bank card sales. Bank card sales are any type of credit card or debit card type of sale. So Visa, MasterCard, and Discover, any transaction that's going to take payment using any one of those different types of bank cards receives money from the bank as soon as the sales are recorded. Therefore, they are recorded as cash sales. So in this case, we have bank card sales of $700, in which case $42 was taxed. There's also cash discounts or sales discounts. This is the amount a customer can deduct from the amount owed for purchased merchandise if the payment is made within a certain time. In situations like this, certain organizations may offer customers benefits to paying early. If they are operating under the terms 2/10 and 30, that means that they will receive a 2% discount if the payment is within 10 days of the received invoice. Otherwise, the net balance is due in 30 days. So when you are tracking these types of transactions and putting them in the journal, you're going to have to make sure that they do not fall underneath these types of terms in order to apply a 2% deduction. Let's take a look at some examples and put this into play, and hopefully it'll make more sense. When it comes to cash discounts, we have two different possible scenarios. Let's take a look at scenario one. Merchandise sold is $1,500. There's a discount rate of 2%. Therefore, the customer could receive a $30 discount. Number two, sales slip amount could be $1,500. So now we have a discount amount of $30, which means the amount that the amount the customer has to pay is $1,470. However, when we keep track of this in our accounting records, we have to keep track of it as a sale of $1,500 with a discount and then also recording what the customer actually pays. We cannot just say customer paid $1,470. All monies need to be accounted for in one way, shape, or form. So for this transaction, we are going to be utilizing the sales and then also the sales discount account. Sales account is a revenue account with a credit side normal balance. Sales discounts is another contra capital account, which means it is going to have opposite properties of a revenue. It is going to have a debit side normal balance. Demo problem 14.5, which we'll be going over next time we meet in class, is calculating out cash discounts. So you have the terms listed to you for each of those 5 invoices and the amount of the sales, whether or not tax was charged or not. Then, based off of the calculation, determine the discount. So in this case, if we have invoice 978 and the terms are 2/10 and 30, what is the discount on that $3,000 sale? And then all the way through the 5th invoice. Give that a try, otherwise we will be doing this together next time we meet in class as guided practice. Now let's take a look at recording cash received from charge customers. Let's say on December 5th, Mark received $212 from Casey to apply to her account. The receipt number is 301. What are the accounts that are affected? Here is the source document as we took a look in the previous slides. In this particular transaction, the accounts that are going to be affected are cash and bank for the $212 that was received. That is the total amount of the receipt. The account receivable, which is our controlling account, will also have to be credited for $212. And then also the subsidiary ledger account, which is Casey Klein, indicating that this customer, Casey Klein, paid us $212. So to transact this in the journal, it would look like this. We would debit cash and bank for the total amount of the sale, which is $212. And then we would also have to post to the accounts receivable controlling account and Casey Klein's subsidiary ledger account a credit of $212. And the source document, receipt 301. So demo problem 14.6 gives us a transaction clue that on January 12th, Coastal Computer Company received $36.26 from Lincoln High School in payment of sales slip 412 for $3,700 less a discount of $74. And our source document is receipt number 1112. So record this transaction on page 9 of the journal. A partial list of the accounts used by Coastal Company is shown below. You should have all the information that you need to accurately transact this transaction. Give it a try on your own. Otherwise, if you are unable to finish it or you have questions, we will also be looking at this together in class next time we meet as part of guided practice. Now, recording cash received on account with a cash discount. Here is our source document receipt number 302. We received from South Branch High School Athletics $1,470. However, the payment for this particular purchase that was made on account is recorded this way because of a discount. So in our transaction clue, we can see that we received $1,470. However, sales slip 51, which is $1,470 is covering, is for $1,500. Also taking into consideration a $30 discount. So what are the accounts that are affected when transacting this receipt? In this case, we would debit cash and bank for the amount that we received. We received $1,470. However, the sales slip was for $1,500, which means that we had previously logged that our customer, South Branch High School, owes us $1,500. If we simply record a $1,470 receiving of cash, that's not going to have any effect on what our, it's going to leave a $30 balance that is left to be collected from this particular customer. So what we do instead then is we record that $30 as a debit as a contra revenue account to sales discounts. The transaction would look like this in the journal. A debit to cash and bank for the amount owed, $1,470, sales discount debit for $30, and then that would equal the amount of the sales slip that was originally charged to our customer of $1,500, which is going to have to be credited to their account to indicate that they have paid for this purchase, even though they haven't paid what the sales slip was first written out for because of the sales discount. Now, recording of cash sales. On December 12th, On Your Mark had cash sales of $3,000 and collected $180 in sales taxes. This is coming from source document cash register tape 55. So what counts are affected in this situation? Here is our source document. In this situation, we are going to debit cash for the entire amount that has been received in the register tape or in the cash register. In this case, it was $3,180. Of that $3,180, $3,000 comes from the sales of our merchandise that was sold to customers, and $180 was sales tax collected that we have to pay to the government at a later date. So in this case, we are going to debit cash and bank for $3,180. We will credit sales for the $3,000 that we sold from sales of our merchandise, and then also credit the liability sales tax payable for $180, which is going to be kept track in the sales tax payable account to be paid to the government at a later date. And our source document then is listed here as tape 55. Now, if we record bank card sales, Remember, now we have $700 in bank card sales. These are like our credit transactions. These aren't cash transactions. And we have $42 in sales tax that was also collected. So on your marks, bank card sales, this is the transaction clue, which is also going to be represented here in the source document. How do we transact this? But before we do that, what are the accounts that are affected? We are going to debit cash and bank for $742. Of that, only $700 of it was sales, and $42 was sales tax. So these are the accounts that are affected. How do we put it in the journal? In the journal, we would debit cash and bank for $742. We then credit sales for $700. Sales tax payable, credit $4,200. I'm sorry, $42. And still, tape 55 as our source document. This concludes Chapter 14, Section 3, Presentation Lecture. Please make sure and go through all of the section lectures, 1, 2, and 3. Make sure that you have watched them. Make sure that you have answered the questions on Play Pose It. Make sure that you have completed the notes to better prepare you for your quizzes and for your unit exam. I will see you for guided practice problems and independent practice problems for Section 3 next time we meet in class.